You're listening to the Fix the Money, Fix the World show
on the Bitcoin Made Simple podcast network.
Here's your host, Luke Mikic.
Welcome back to the podcast, guys. I hope you're doing well. I'm here to introduce an episode that I recorded with one of the most underfollowed Bitcoiners on Bitcoin Twitter. He goes by the handle The Blej, and he did actually reveal his name for us on the podcast today. So we will know him as Adam Blej. And let me tell you, you guys think I'm bullish? Well, The Blej blows me out of the water. He's got some pretty radical ideas and views of how hyperbitcoinization is going to unfold over the coming years. And we discuss obviously how that transition is going to look. We discuss hyperinflation and whether we are actually witnessing the early signs of hyperinflation, not just in little smaller emerging markets like Venezuela, Zimbabwe, and Iran, etc. We actually think that it could be coming to a neighborhood near you in the Western world. So we obviously discussed that, and we discussed something that Blej has some very interesting views on. He sees the Bitcoin circular economy in ways that most people don't see or don't take the time to think about. So we discussed that one really deeply, and I think that's something really important that Bitcoiners really need to kind of think about more, because we don't imagine what a Bitcoin standard or a Bitcoin circular economy is going to look like in the future. But the Blej and I, we talk about it lots in today's episode. So I really hope you enjoy it. We should probably hear from today's show sponsors, because guess what? If the world does unfold like the Blej and I think it does, and things get more and more volatile, things get more and more crazy, having Bitcoin on an exchange is a security risk. You know what they say, not your keys, not your coins. And if your coins are sitting on an exchange, it's not your Bitcoin. The exchange owns your Bitcoin and you don't own a thing. So I would personally recommend getting your Bitcoin into a hardware wallet. You guys will know I've used them all. I've used a Cold Card, I've used a Ledger, I've used a Trezor, I've used software computer wallets like an Electrum and like the Spectre desktop wallet. And the Bitbox O2 is the easiest beginner-friendly hardware wallet you can use. I would highly recommend you go and get a Bitbox O2. It literally takes less than 5 minutes to set up. Like, there are no excuses for having Bitcoins on an exchange. And I would highly recommend you guys go and grab a Bitbox O2 to take your security seriously. Like, honestly, over the coming years, people are seriously underestimating the value of Bitcoin, and they're just kind of willy-nilly about their security. It's really time to take your OPSEC a little bit more serious, Bitcoiners. Go and get yourself 5% off a Bitbox O2 hardware wallet if you use the promo code Bitcoin Made Simple. That is Bitcoin Made Simple, no spaces. Go and grab a Bitbox O2, 5% off. Our second show sponsor for today is an up-and-coming Bitcoin conference called Bitcoin Day. Now, you guys have all heard of the Bitcoin conference. The most recent one occurred in Miami just 3 to 4 weeks ago, and it went off. Well, Bitcoin Day is an up-and-coming Bitcoin conference, and like Miami, it is going to be great fun. You can meet all sorts of Bitcoiners there. The next one is on June 11th. It is Bitcoin Day Charlotte. So that is in North Carolina. If you guys want 10% off your tickets for the North Carolina Bitcoin Day event, head on over to bitcoinday.io and you can use a promo code Bitcoin Made Simple. Again, that is no spaces, Bitcoin Made Simple, and you can get 10% off your tickets for the Bitcoin Day. With the housekeeping out of the way, let's jump straight into this episode with the Blej. I really hope you guys enjoy this one, and stay safe out there and keep stacking your sats. Welcome back to the Fix the Money, Fix the World podcast, guys. I really hope you're having a good day. Today, I've got the pleasure of sitting down with someone who I regard as probably one of the most underfollowed Twitter accounts there is on Bitcoin Twitter, and today you're probably going to find out why. Today I'm sitting down with somebody who goes by the handle of The Blej. Blej, how you doing today, brother?
I'm good. How are you? I'm so glad to be here. Thanks for having me.
No, anytime. The pleasure is all mine. I'm really, really looking forward to this one because I think you've given more thought to what kind of a hyper-Bitcoinized world looks like than most other people have. And I really I'm interested to pick your brains about that. But before we jump into how we're going to get to hyperbitcoinization and what that's going to look like, I'd love to get your kind of rabbit hole story, because I think yours will probably be a little bit more interesting than most. So what were you kind of doing before Bitcoin, and what kind of led you down to the Bitcoin rabbit hole?
Yeah. I mean, to take my life story and simplify it is, I've been a very creative type, drawing, did charcoal and graphite drawing, where I would take like old photos and redraw them in realism. That led to photography. Just more of a social person growing up in the restaurant business, having served tables and stuff. I also grew up in a family that has been part of a philosophy school for as long as I can remember. And so I've kind of been raised to have appreciation for certain things like hospitality and service, as well as, awareness and paying attention to sort of the things that are going on around you and the things that are going on inside of you. And, it's kind of all led towards this path where, I guess, I could just fast forward it to COVID. COVID was kind of what kicked off my interest in Bitcoin, simply because I guess a number of things occurred. My income was absolutely destroyed. I had to move back in with my family, my parents in my mid-30s. So that was disheartening. But I got to collect unemployment and was like really starting to think about how I wanted to use my money. I had gained an inheritance from my grandmother passing maybe 5 years ago, roughly. And I spent a lot of that on photography equipment, and I had some left over that I was like, oh, I'm not going to waste it. And it just kind of seemed after a while that it was just sitting there and not really doing anything. Not that spending it on my photography equipment was a waste, because it's something I do professionally and I've made, plenty of money on it. But so I was just talking to a friend of mine, and we were talking about, I wanted to finally start investing. And this was like, I don't know, September, October, November of 2020, roughly. And, he was somebody who I respect his, sort of business acumen, his financial sort of understanding, I guess, at the time. And, he had sent me to, funny thing is, he pointed me towards a podcast with Tim Ferriss, and he was interviewing Naval, if you guys are familiar. But and I got really interested in what Naval was saying, and Naval has a podcast where he just, and a Twitter that's just, I really appreciate, because it's just all about like, tweet storms, these like little tidbits of advice that kind of can guide you through investment and life. And there were a couple of core things that Naval said that really resonated with me. Like one of the things was like, seek foundational knowledge. And so how did this translate to me? Well, basically I was like, I needed to do some accounting for my business, having an LLC and stuff. And I didn't really know how to do accounting. So, I decided to research accounting and gained honestly a different understanding of how people view money, simply from understanding accounting and how to keep books. The idea of money coming in is still valuable, even though you don't have it yet, like the current assets part of the balance sheet and stuff. And I think, there's a number of other things that Naval had referred to, but I think what it led to was that when I asked my friend about where do you think I should invest, I was initially thinking of stocks, kind of like really interested in watching this whole Wall Street bets thing go on with GameStop. Not that I hopped in on that or anything, but basically, he was like, yeah, I think you should look at this. And he sent me an article from Lynn Alden that was like Fraying the Petrodollar. I think she wrote it in May of 2020. Nice. And it just was like 65 pages of like, how the petrodollar system works, which I never understood. Had no knowledge of, financial systems and stuff like that. I understood, why the market collapsed in 2007, 2008 from a very public sort of opinion standpoint, meaning like I understood it the way most people understand it. But reading that article like opened up everything. And I called my friend back after reading it. I was like, bro, this is just a Ponzi scheme. Like dollars are Ponzi. The entire value is backed by the ability to reissue US Treasury bonds. And so therefore the value of the dollar is backed by the demand for US Treasury bonds. And if there's no demand for Treasury bonds, then its liquid value falls off a cliff. And they also have obligations to those bonds. So like 2x times they have to print money to like pay for the lack of demand. And that's where you lose your value. And so quite literally, it's backed by demands for US Treasury bonds. And this is just something I understood so clearly. Triffin's dilemma. It just made so much sense to me. And then, he told me like, yo, I've been putting my money into Bitcoin. And that's when I got on Bitcoin Twitter. I was reading certain articles. It kind of mainly started from because he's not like a Bitcoin maxi in any way. But he pointed me towards Michael Saylor and actually, what's his name? Raul. I want to say which is funny because like, I kind of just followed in their footsteps. So I took like an 80% position on Bitcoin and a 20% position on Ethereum. And as I got into Bitcoin Twitter, I'm a regular in Toxic Happy Hour with Pubby and Anders. And the conversation has been awesome. And I realized real quick that like this is a Bitcoin only kind of thing, and it makes real sense to me. Another friend of mine pointed me towards the Bitcoin Standard. I read that, and then it was on like rabbit hole addiction, all the way.
Fuck yeah, that's the rabbit hole, man. I'm surprised that you only found Bitcoin September 2020. It's so recent. It's so recent. And only what's that? 18 months ago, and you're already. Like, I remember listening to you in Spaces in mid 2021. Is that when we met?
I was somewhere around there, man. I wish I had a better track record of that. But yeah, I mean, right around there.
Yeah, time flies when you're having fun on Bitcoin Twitter. I can't keep track of when Spaces popped up, but I think it was like mid 2021. And dude, that's wild. You'd only been in Bitcoin for less than a year and it was like one of the first times I met you on Spaces. I was like, fuck, I've got to get this dude on the podcast. But yeah, I mean, that's the biggest thing most people misunderstand, the fact that the money that we all use and the money that we all earn in today, it's literally a Ponzi scheme. People are like, what? If there's any new listeners who don't understand what the petrodollar system is, I would point you towards a really, really, well, that article firstly is great. The Frame of the Petrodollar by Lynn Alden. That's a great read. But if you want a shorter, more compressed version, I'd go and read, I'd go and watch a little 20-minute video that Richard James has put together. I think he's done 3 videos. He's done one on sound money and gold. He's done one on the frame of the petrodollar, and he's done another on the anatomy of the state. But so any new listeners, head over there, Google Richard James, frame of the petrodollar, or I can't remember exactly what it's called, something about the petrodollar, and that gives you a great introduction of what that is. And most people just don't understand that our money is a Ponzi scheme. And maybe that kind of ties into what's happening around the world at the moment. All Ponzi schemes collapse. All fiat currencies collapse. I think it's 775 times we've used the money unbacked by gold. It's collapsed or had to be restructured in one way or another. Blej, before we get into kind of talking about hyperbitcoinization, I'd love to pick your brains about what you think is going on around the world at the moment in 2022. Because we look around the world, it's record-breaking inflation all around the world. You've got Sri Lanka defaulting on $50 billion of debt. You've got the Lebanese central bank and government announcing they're bankrupt. It really feels as if things are escalating. And I think 2020 was a big kind of inflection point for me. But as you look across the world, what's your kind of macro view? How do you see 2020 and 2022 in particular? What the fuck's happening?
Yeah, I mean, it's all going to shit. I mean, which is what do you expect when you have this type of money, trying to account for everything. I I don't know, I'm not like the technical savvy macro. Like I can tell you like what markets are doing this, what market's doing that. I'll just talk about it from like a money standpoint. Like you print a ton of money and you incite price instability, which represents itself because you're printing money and the economic productivity is basically flat. Then you're getting price increases. And when you get price increases everywhere, it incentivizes it incentivizes productivity because people don't understand that this price increase isn't a representation of the devaluation of your money, but they look at it more initially as like, oh, there's an opportunity to make more money. So you have this speculation, which increases monetary velocity. People start getting involved in certain things. But the best way to make money when you print money is to just gamble on the value of other things. So you're gambling on basically how much you're devaluing your own currency essentially versus some other investment asset, whether it's real estate, stocks, or anything else. And then you get this world, just like it happened in sort of the 30s and stuff under the Great Depression. I work, you know what I mean? And I know for a fact in my industry, I work in the restaurant business that and as well as being a photographer, but like in the restaurant business in particular, like they're finding it more troubling than ever before to fill staff. Well, why? I think more people are speculating with their money. They think they're richer than they really are, and they're going to end up hurt once this whole economy goes belly up. But as you increase monetary velocity, this is the thing about accounting, right? Like this is where I really gained a clear understanding of this. Like as money changes hands, what that means is the current assets part of your balance sheet, which includes all the income you're going to make over the next 12 months, starts to climb. And suddenly you're in the green off of income based off of debt obligations that may not come your way. And so once that you throw a wrench in the tire or a wrench in the wheel or in the motor, whatever the expression is, I'm terrible with expressions. But once you throw a wrench in that, it all freezes up, oh, I don't have my income anymore. So now your current assets on your balance sheet goes straight down because there is no income coming from these obligations that you're holding. And, you get a whole freeze up of monetary velocity. And therefore, the overall quote unquote monetary value that's circulating around the world just drops drastically and you have no more liquidity. And so and when I say no more liquidity, the other way of saying that is there's not enough money in the entire money supply to pay for the price of the economic productivity that is there. And you have this freeze. And, you can only bandage up that freeze so many times. It's all built on the ability to lower interest rates so that you can, again, jack up the current assets part of your balance sheet. If you're holding an existing bond, let's hypothetically say it's 10%, even though it's been 20 years since that's been the case. And then the US Treasury cuts interest rates on those Treasury bonds to 5%. Well, now all the demand for a Treasury bond is going to your 10% bond because it pays out more. And so that's the Ponzi scheme, right? And so you create this liquidity, but you're fundamentally devaluing the demand for your own debt, your own sovereign debt. And that's the value that's backing the dollar. And so it's like a bumblefuck. It's like, what's the point of even talking about it? It's such garbage. And so, yeah, I mean, I've been saying it for a year. And again, I'm not some macro specialist, but I understand how money works. I understand that when you have an out financially, you can trade a financial asset for another financial asset without any loopholes. Then that is super easy to leave value, change your unit of account. I mean, the Turkish lira just depletes in a matter of hours. So it's you wrote an amazing article about the adoption of technology. And I feel and how, as time goes on, the rate at which new technological innovations are adopted increases. And so Bitcoin is just another technology that, like, if there was no sort of like knowledge base to have to, figure out what is a cryptocurrency. If there was not, like, you didn't have to understand the system, you didn't have to, figure out how to use a hardware wallet and worry about the fact that if you like forget 24 words or leave it on a hard drive somewhere, like, you know what I mean? Like, if there weren't those loopholes, like, Bitcoin would have won already. Because the way value works in these free market competing monetary assets is the second your shit is dying at a legitimate rate, like the second it's going, like it's just depleting and depleting, like you have to get out of there. Like, why would you hold that? What hope is there in owning a dying fiat currency?
Couldn't agree more, brother. And I think that's, firstly, thanks for the kind words. That's kind of, I think that's what people are coming to realize. I think for the past 50 years, from 1971 to 2020, the inflation was so low and, asset prices were obviously increasing, but most people kind of felt something was a little bit wrong, but they couldn't tell what it was. And I think 2020, 2021, 2022, I think the problem's really coming out in the open. I think you're watching a once democratic country like Canada freezing the assets of people who participate in a freedom convoy. That's what it's called, a freedom convoy. The people didn't do anything wrong. They had their bank accounts frozen. You're watching like the Russian central bank have $600 billion of money frozen. You're watching the price of homes, rent and food increase at 30 to 50% a year. And people will come into the realization that, hang on a minute, maybe the money's broken. And like you just said then, it's such an easy, when you understand the money's broken and you do 10 hours of research, 5 hours of research, looking into what Bitcoin is, the transition's easy. You're like, oh shit, maybe this Bitcoin thing's interesting. Maybe I'm going to sell some of my fiat into Bitcoin. And I think the fact that Bitcoin's been around for this 10 or 12 years, like it has now, it's kind of gaining this kind of, not network effect. What's the word for it? Becomes not a Veblen good, not the Streisand effect, but as technologies hang around for that 10 or 12 years and you get to an adoption point of, 1 to 5%, generally the rest of the adoption of the technology occurs rapidly. And I think that's kind of where we are with Bitcoin as a technology, Bitcoin obviously as a money, but I think the 2020s, this decade in particular, you're going to see things change a lot. And maybe I'd love to get your thoughts of, we obviously both agree fiat's a Ponzi. We obviously both agree Bitcoin's the superior money, which we'll probably get into a little bit later. But how do you see that transition unfolding? Do you think it's going to be a little bit crazy? Which countries do you think are going to have a harder time?
Yeah. So, I mean, I think a lot of people, have been having this conversation on Twitter Spaces a lot. And I think some of the more accomplished people look at, oh, well, one fiat's going to die and then another fiat's going to die. And it's going to be this domino effect. And they're all going to fall into the dollar, which kind of makes sense because the dollar is still the most liquid asset as far as like accepted for payments in markets all over the place. And so I could see that happening. What I can see also happening is before you get to the last domino being the dollar, that all of a sudden the last 10 or 15 dominoes just kind of fall collectively into Bitcoin if it happens. Because again, like if these other currencies are dying, they're dying because of debt, and it's not like the US is avoiding any of that. Again, it really all comes down to demand for US Treasury bonds. And so we know that countries like China don't really buy these Treasury bonds anymore, and they just collect money. If you don't have demand for these Treasury bonds, you have to print more money. And it's not necessarily about how's the US dollar doing against the lira. It's like, how's the US dollar doing against an apple or, a shirt or a gas or, how is your money working as a unit of account in your real economy? Because it will get to a point where it's like, why would I hold this if in 30 days it loses 10% of its value? We're not there yet necessarily in the consumer market, but we'll get there. And then what happened? Like, why does it have to, like, why would people choose that? And very quickly you'll see like, oh, I can just hold Bitcoin. I mean, at that point, forget about it. Bitcoin's got to be rocket, where it's like, oh, it's going to double in money, like every double in value, like every versus the dollar every 3-4 months. Like, why wouldn't I hold that? Or every month even, like there has to be a mad rush to it, because like the nature of human beings, right? And this is like the philosophical rabbit hole part of this thing, right? Like we've learned a long time ago that we're better when we work together. We've learned that like from day one. We hunted in groups. We didn't hunt individually. You know what I mean? So when we farm for a community. Why would we waste all this time farming for ourselves when like we can become 10x, 100x more productive farming for an entire community? And that's the nature of an economy, is always seeking to like express this cooperative aspect of being an organized, social hierarchy kind of structure, whatever, but still organized, species. So we're always moving towards cooperation. And like when you have inflation, it's the complete opposite. It's all about coercion. It's all about speculation. It's like not about productivity. It's like, how do I get more value? How do I get more money? How do I get more money? And so I think that like this transition to hyperbitcoinization is going to be rapid. It's going to be really volatile. It's going to be scary at times. But at the end of the day, I think we climb out of it really fast, because I think it's a lot easier to climb out of a depressed economy when you're not when you have no debt to start from. You know what I mean? So like if fiat currency dies, then all debt dies with it, because like why do I want you to pay back my debt when you're giving me shit that's like incredibly worthless? Like, like I don't need you to pay back that debt. So if all the debt dies and now we're trying to climb back out of this like super unproductive like depression from a global economic or global financial collapse, then I think climbing back out of it is actually going to be a lot easier. And I think it's going to be a lot easier because depreciation in this type of environment is rapid fast, where it gets to a point where you have this unproductive economy, and people are going to want things. So they're definitely going to be demanding goods and services. They're also going to be demanding an income, because right now there's in this transition to hyperbitcoinization, like you don't have an income necessarily, you don't have a job. But if you're lucky enough to have some Bitcoin, you could do things with that. It's going to be scary to spend it when you don't have an income. So maybe it just incentivizes cooperation more. And my view on the best way to be prepared for something like that as a community and not as an individual is that, let's look at the game theory of this. Essentially, let's look at the different game theories as far as credit. When you talk about dollars versus Bitcoin, like what's an interest rate on a loan? An interest rate on a loan is a measurement of the risk, essentially, to the lender of lending out this money. So if you're somebody who doesn't have a high income, doesn't have a high amount of assets, can't collateralize, this all raises risk. That risk goes up, you get higher interest rates. We have a money printer. So we have banks that have essentially an incredibly high abundance of dollars and an infinite supply for, just to be poetic. And therefore we're able to just cut interest rates to 2, 3, 4%. In a Bitcoin world where Bitcoin, it's also, and the money is also depreciating in value over time because of more money printing. So, like the risk of losing those dollars over time becomes lower. And, it's like, whatever, like now I have a mortgage-backed security or a commercial bond or whatever that I can just sell this amortization, this payment back to me, this debt for cash right now. And that's kind of the system that like keeps it running, right? Without the bonds, I mean, forget about it. It's worthless because interest rates are negative yielding compared to inflation. So anyway, in a Bitcoin world, and with Bitcoin as money, you have this asset that's absolutely scarce. It's climbing in value. To a lender, this creates a really high risk of like, well, if I don't get my Bitcoin back, I'm really lost. because I'm going to be like that Bitcoin that I don't have back is just going to be lost value, lost accruing value over over the years, like as it becomes more valuable. And so you're going to jack that interest rate up. Now look at it from the borrower side. Okay, I'm going to borrow an asset that's going to climb in value, which means that I'm borrowing this money so that I can invest it in something, which means I don't have this money, and I'm hoping to earn that initial investment back plus some to pay back the interest as well, and then also make a profit. And over time, that Bitcoin is going to be harder to come by because it's climbing in value. And so, like, even at a 1, 2, 3% interest rate, especially in this transitional period to hyperbitcoinization, where Bitcoin is rocketing in value, like credit markets are going to dry up completely. Like, you'd be a fool to take a loan. You'd be a fool to give a loan. Like, you tell me where you're going to find those fools, and then you could have credit. So then what's left? Well, if we're sitting in this world where production is dying because of this depreciation and, this transition and whatnot, and people don't have jobs, so they're not making an income. Let's say they do have Bitcoin, some of them, and some of them are very much more willing now to work for Bitcoin. They're demanding an income. They're demanding goods and services. So how does this work? Well, in my view, the economic model that hopefully we can all find is that if we need to capitalize new businesses, and that capitalization needs to lead to income for people. And the only way to do that with credit markets completely drying up is to embrace equity and embrace investment. And the best way, in my opinion, to do that is to create a system where, this is where stocks are actually valuable, where shares of stock are actually, shares of a business are actually really valuable, where you take every business, you create like a stock exchange essentially in every local community, every city, where these people who have Bitcoin, don't have a job, and are demanding goods and services can walk up to an exchange and find every single business that wants to open in their local community to provide those goods and services, offering up essentially 1 billion shares of their business. And in which case they'll keep, 60%, whatever it is. And you'll invest in that equity. But the only reason why you'll invest in that equity is for a dividend, so like each share will pay you a certain percentage of profit. And hopefully rather quickly, not like every month, but maybe every week or even every day. And then, so like, let's stop for a second and explore that game theory about like, why would you only do it for dividends? Well, if you're not printing money, then the value of that asset, of the shares of equity of that business, likely aren't going to go up in value versus the value of the Bitcoin. So if you take the S&P 500 and you divide it by the Federal Reserve balance sheet, then essentially you have a flat price. And nothing can really climb in value essentially versus your money that's absolutely scarce and has global demand. So it's it has the most like, it's the most in demand asset with the least amount of supply. So like it's got to be the most valuable asset out there. And so the only reason why you'd want to invest in equity of a business is not so you can resell it later. It's so that you can hold it, and every day or every week you can collect a couple of sats or 20 sats or 100 sats or whatever it is. And so if a community comes together, a local community, through these exchanges, and can invest in a restaurant, a gas station, or this and that in such a manner where now you have the freedom to choose your own diversified portfolio. Yeah, I'm going to go buy this share of equity from this gas station for like 10 sats. And I'll probably not get those 10 sats back for like 2 years. But if it only costs me 10 sats to get it, and every little bit, like every few months, I get a Satoshi back. Eventually, you'll have gotten your original 10 sats back, and then you'll keep collecting more. Maybe over time, it'll be a little bit less because the value of the Bitcoin's climbing and the economy's starting to produce. But like what happens here, game theoretically, is you create an economic environment where the majority of people in your society, in your community, are making the majority of their cash flow from equity rather than from wages. And so what happens with this? Well, if I'm working for, a warehouse somewhere, and I'm making a very minimal wage, but I also own a ton of businesses and I'm generating a cash flow from there. And this productivity of the economy generated from being invested in your community produces economic productivity. That economic productivity means more things need to be priced in the same amount of Bitcoin, means those prices need to drop, means your Bitcoin's more valuable. So the mentality of how you're going to take care of yourself fundamentally, just based off of game theory, in my opinion, suggests that we need to look at wealth way more as a community thing and way less as an individual thing. I know I said a lot. I don't know if you want to chime in, but
it was brilliant. I didn't want to interrupt. You raised so many good points there. A couple of things I want to double click is, firstly, for any new listeners who aren't astute in macroeconomics, interest rates is just the cost of money. How much interest do I have to pay to borrow money? And the way I look at it is, the better the money is, the higher that interest rate is, because like you said, Blej, people don't want to lend out their money if it's very valuable and if it's appreciating in value. So right now, I think it's no surprise that interest rates are at 5,000-year lows. Any people listening, just think about that for a minute. 5,000 years lows. That's why I always say the money has never been more broken than it is today for the past 5,000 years. I think the money is fucked. We're on this globally interconnected fiat system where it's a competitive race to the bottom. Whoever can devalue their money the quickest, they get to benefit through making their exports look more attractive because their currency is weaker. So I wanted to double click on that point. And then before we really get into the Bitcoin circular economy and how that's going to play out, I would love to get your thoughts. What price? What's your price, Blej? When do you start lending out your Bitcoin and making investments in companies? Roughly what kind of price would that be in today's dollars? That's a thought experiment on its own. And when you do start lending out that Bitcoin and making investments, what interest rate are you charging for that? Or what interest rate or what kind of return on your capital are you expecting?
Yeah, I mean, that's just, I guess it's really up to the rest of the society as far as how I feel about doing that. Because again, one thing is really true about Keynesian economics is that as your money climbs, you hold on to it more. They like to say you hoard money, but that basically said what that doesn't include is that over time your economy goes down in price because people aren't spending their money. And so eventually there's this balance that's found because you have enough money as a community to want to spend it. And then productivity climbs and so on and so forth. Again, I would never lend out my Bitcoin for an interest rate. I would never do it. It's just not something I would ever do. I would definitely invest. My first investment would be local. So again, let's just take it to the transitional, transitioning from this garbage economy that we're on into a real economy on Bitcoin. I would only again, because it's so community, why would I want to invest in something that's national or multinational when it involves the idea of your entire world has to have a productive economy? And I say that loosely, but it's kind of true, right? If I want to do business all over the world, then the economy's got to be doing business. What's really beautiful about Bitcoin is you don't need this whole global economy to really be rocking and rolling. What are the core things that matter? You need energy. You need to take that energy. You need to make food. You need to, have clean water and have those kinds of systems. You need to be able to distribute the energy. And then from there, you can like kind of grow, right? Like those are your bare necessities. You need heat, you need all of those things. And then it's like, oh, well, yeah, I do need to clothe myself. I need to, like smell differently if I want various shampoos or whatever. But like my point is that like as long as you can find the energy part, like we all have land. We're very capable human beings that have discovered ways to like cultivate, honestly, like crappy land and like irrigate it and like turn it into over time, a much more nutritious, topsoil and grow food out of that. So like I'm looking at my local community and trying to be like quote unquote politically active in letting my local community know just how important it is to find a level of sovereignty as a community, starting with energy. And from there, I'll make my investments. So like, all right, so now we have energy sources that we can harness locally. So we know we're good regardless of the rest of the world. Like, great, let's take whatever, who wants to start businesses and go after that. How much capital do you need to run that? I'll finance, you'll finance. Great. Like, let's get the community together again, stock exchange in a cooperative way, not gambling like, oh, I want to sell this right now so I can make more money. But like, we need this product. We need this to come. We need this to take care of us. So like, let's all financially invest in that. And I'm more willing to do so, knowing that out of investing in that, I'm going to generate a cash flow. And so that's the start. Like, and then there's farms. Like, where's, like, I can't tell you price wise, I can tell you where I want to put my investments. It starts with energy, it starts with clean water, and it starts with food. That's it. From there, we'll see how the economy does. But the idea is like, yeah, you want to live frugally and like kind of set it up, set yourself up and your community up to deal with these kinds of things. And I think that happens fast. Like, I think that really happens fast. Because it's going to be chaotic if it doesn't. And I think, out of chaos, people find that very quickly there's a lot of reason to start cooperating and make things happen. But yeah, nobody's going to lend their money so that you could be this individual business trying to compete in an economy that's not working, all while depreciation is happening or deflation is happening at a super high rate. I just don't see it. So yeah, I mean, dollar price, I don't care about dollar price. Like, I tell people all the time, like, yo, do you think if they're normies, right, and they're not into Bitcoin, like, yo, don't you think it's a little too late? And I just tell them the same thing. I'm like, bro, as long as Bitcoin is still priced in dollars, you're still early. Like,
could not agree.
Like, that's what we're talking about. That's what we're talking about.
Yeah, that's me, man. It's hard to put a dollar price on it because, like you say, when the time comes, you do start lending out your Bitcoin. There probably isn't dollars around, so it's hard to kind of conceptualize what that price is. For me, though, I look at the $900 trillion of assets around the world, and I say, look, I think everything's been monetized, whether it's the $100 trillion of equity, the $350 trillion real estate market, the $200 trillion bond market, the $100 trillion fiat market. Once most or 80% of that flows into Bitcoin, and Bitcoin's theoretically worth something like, $80 to $100 million a coin in today's dollars before hyperinflation. That's when I start lending it out. But by then, there probably isn't a dollar price. So calling it $80 to $100 million a coin, it's made a little bit irrelevant. But I like this idea. I'd never considered this idea of when you actually are investing your Bitcoin in the future, you're only really doing it on a localized level. I think that's very interesting. That sounds a lot like Citadel investing. So the idea behind this, you're only really investing to further the growth and the productivity of your local living area, your local town, your local citadel, whatever that could be.
Yeah. I mean, I think investing in multinational corporations, like, eventually there'll be businesses that get there. But again, I just think there's be so much productivity drop that a lot of things, there's going to be abundance of stuff where if you have the time and the motivation to do something with the stuff that we've produced with fiat and no longer really, really want necessarily, like, we're creative, we're savvy, and there's things we can do. But at the end of the day, like, here's the thing, like, let's discuss what happens in a Bitcoin economy when you don't embrace this idea of fractionalizing every business, when you don't embrace the idea of equity, when you embrace the idea of competing interest rates in markets, right? Because like that's the other thing that drives an interest rate down, right? Like if you are in a position to actually lend out some Bitcoin, which I find difficult, like you have to compete with other lenders for the opportunity to lend out your Bitcoin and then gain an interest. But like, like in order for there to be competition, there needs to be an economy that makes it feel worthwhile to invest in that economy. But like, Ray Dalio has a YouTube video that's great. It's like a half hour long, and if anybody hasn't seen it, I highly recommend it. But I think it's called The Money Machine. But it's all about short-term debt cycles and long-term debt cycles. And if you have debt, it doesn't matter if it's fiat or Bitcoin. Like there's going to be a debt cycle because you borrow money, you raise demand for whatever it is that you're borrowing money for, and therefore you get inflation for at least that specific thing. And if you do it on an economic scale, you get inflation everywhere. And then you have to pay down the debt. And so you get deflation. And it's like, I don't know why people want that economy. Like, why do you want that? Is it because you want to speculate on increasing and decreasing markets? Like, I'm tired of looking at investments and product and my financial future based off of this idea of capitalizing off of somebody else's demise or gain. It seems rather, disingenuous. And I've never been that type of person. Again, like being raised on hospitality and service, it just doesn't sit well with me. So like, yeah, I'm in Bitcoin because I think that the game theory, moves in that direction, as well as just natural human instinct. So long as we have a proper accounting system, because we have sound money, naturally moves in this direction of like wanting to help each other out, wanting to support and like motivate people and be cooperative. Like I just like if you have like markets to lend out in, I think you're going to see an instability in price action moving way more into deflation, and you'll get volatility in this economy that might, I think over time, it's not going to be as extreme as fiat, but like you'll have these ebbs and flows that, in my opinion, like just kind of slow down the overall productivity of the economy and the overall success of the economy over time. Whereas if the overwhelming majority of people embrace this model where we're all investing into, like, let's really look at this, right? Like we're all investing into our businesses. And so now, as I said before, like the majority of people are making the bulk of their money off of dividends and cash flow paid out from owning equities or owning shares of businesses. So now when you're going to work and someone's like, oh, we need to cut your wages because deflation, which is still a thing, like in a Bitcoin world, right? And B, like, like the other side of that is you cost me money and like I want to make more profit. And this is where technological innovations come into play, right? So like we have a whole half of this political spectrum that completely hates automation and robotics and stuff like that because it takes jobs away. And there's something to be said about that. Like it takes jobs away, but it also takes away costs for the company. So if it takes away cost, then as you'll know if you read The Price of Tomorrow, that like technology is inherently deflationary. So if we can move the majority of a community into owning into having the bulk of their income come from profits, right, instead of wages, then they're less likely to care about their wage issue and raise a political war off of like quote unquote minimum wage needing to climb or whatever nonsense, right? And that'll free up the economy to fully embrace like innovating and automating where required. Like, could you imagine farming today if all of a sudden you took away every tractor and every single bit of technology except for like handheld tools, and then said, all right, farms, like you got to hire tens to hundreds of thousands of people to now farm your farms, like collectively as an industry? Like, how much more does the cost of food climb in that situation? And is there like tons? Like, it's like immeasurable. And so do you really, like, people don't ever talk about that. It's like, oh, okay, you're a man that McDonald's wants to create like an automatic frying machine so it could fry its French fries, and that makes you aggravated because, like, oh, that takes a job away. But you don't care that the food industry does it because, or like the farm. I don't hear anybody ever complaining about tractors on a farm, like harvesting massive amounts of food that feed this incredibly large population of human beings. Like, it's important that we embrace technology. It's important that we embrace innovation. It's important that we embrace cooperation and like get away from speculation, get away from coercion, get away from debt, get away from wealth division. Like, these things are so fundamentally important. And like, that's if we want to go to Mars. Like, if we want to be a species that can outlast this entire solar system, then these are the types of steps that we have to take forward, because there's no way we can get to it where like we still live this, I think you would call it like neoliberal feudalism is kind of like what we have now, where people just pay rent. And that's the same thing as paying taxes back when there was lords and stuff. You know what I mean? Like,
I couldn't agree more. I think our civilization is actually doomed if we don't adopt Bitcoin. I think like we are trending towards a really scary world where everybody just becomes a leech off the government and everybody's given some minimum wage job that doesn't need to be there just because the government and the nanny state needs to keep them busy. I love how you said we need to embrace technology. Like, I think the more our world kind of moves into the digital age, the more and more things around us are going to be digitized. More things are going to be automated. More and more things are going to continue to get cheaper and cheaper and cheaper. And that's the premise of The Price of Tomorrow, Jeff Booth's great book. Everybody should definitely go and read that one. It's just saying you can't have an inflationary monetary system that needs ever expanding debt and ever increasing prices when it's fighting all of these technological forces that are making things cheaper. People just, it's such a simple concept. And I just think like Bitcoin fixes this. Bitcoin is a deflationary money. And as we move into this digital age where things are going to become more and more deflationary, you need a deflationary money to match that. And it just makes simple sense.
Yeah. But, and it does make simple sense, but there's also things to consider. And like, in the price stability is the target. It's not really deflation or inflation. It's price stability. Is that something that's actually achievable? No, not really. But what does that really mean? It means you're trying to find a balance between deflationary forces and inflationary forces.
I think I did an interview with Knut Svanholm. He's the author of many great books in Bitcoin. Probably the most recent one was Infinity Divided by 21 Million. And if you haven't talked to him, I think you should talk to him because you guys are both given this idea of hyperbitcoinization a lot of thought. But he kind of makes the point that Bitcoin, when we're on a Bitcoin standard, the price of Bitcoin could be appreciating so rapidly that it might actually be too volatile to use as a unit of account. Like he's saying, look, if Bitcoin's the global money and if the economy is growing by 5, 10, 15, even 25 or 30% a year, that means the price of goods and services is falling at 5, 10, 15 or 25% a year. And he kind of like jokingly makes the point that maybe we need to price the economy in liters of milk or, something that's less volatile than Bitcoin. Yeah. What do you think? Do you think Bitcoin with the unit of account?
I disagree with that. I think like, all right, great. You have us. So you're raising multiple points. I'm going to try and keep this as coordinated as possible. But basically what he's referring to is now you need to have a store of value that's separate from your medium of exchange and your unit of account, essentially. in the same way that we've created dollars backed by gold. So I don't really know how that works, because again, you're gonna have something that's on sale anyway all the time, and the only thing that you do when you bring in this other unit that is a quote unquote derivative of something that actually has value. So when you bring in a dollar that's backed by gold during the gold standard, well, then you have an option to either own gold or the dollar. And even though in a bank it might be tradable 1-to-1 or whatever the exchange rate is, like there's like, you saw it in England. I think it was right before World War One. It might have been before World War Two and right after World War One. But like, there was like, they had reintroduced the gold standard, and it created like a real product, like an economic shock, and the productivity dropped. And it basically, like, you when you separate a medium of exchange and from the store of value, then you have the ability to move into and out of one. And so if your economy stops producing or slows down, then you may want to move out of the dollar and into gold, or vice versa, right? Because the value of your medium of exchange is predicated on the productivity of your economy, right? Like, here are the four forces that I think go into inflation and deflation. You have your money supply. Increase your money supply, you get inflation. You have your energy supply. Increase your energy supply, you have deflation. You have economic productivity. Increase your economic productivity, your money needs to be stretched thinner to account for that productivity, you have deflation. And then the other thing is monetary velocity, which is very much correlated to productivity. And the more you have monetary velocity, the more you have people making money, meaning you have income, meaning that 12-month future, what I'm making in 12 months, or the future, your current assets climbs, you have inflation, right? So you have two deflationary forces and two inflationary forces that are going in to find this price stability. And so if you have, the question really comes down to, how do you increase, if you increase economic productivity, you're sort of fundamentally increasing monetary velocity, right? So, oh, you need something, I'm going to give you money to make something for me. That's monetary velocity. Money changed hands, that's economic productivity. So 1-to-1, that's sort of like deflation and inflation in the same sort of transaction. So then the question then becomes, well, how do they become two independent variables, right? Like, how is monetary velocity different from productivity? And it kind of has to do with capitalization. You could have people that work for you, and therefore every transaction you have to pay more people. And so that kind of is more monetary velocity, right? Compared to the same amount of productivity. Or the other way, in a sense, is to have more equitable owners of a business, like I've been sort of preaching, right? Like, if I have a share of everybody has shares of equity, right? Then every time a transaction goes down, like let's say you buy dinner at a restaurant, and that restaurant is owned by 10,000 people. Well, then fundamentally that transaction, the profits from that are going to be divided up with 10,000 owners, So like, you're increasing monetary velocity without necessarily increasing productivity. And so to me, that's a way that you can raise inflation versus the deflationary forces of a growing economy. So to me, it's not about saving money. It's about investing money, so that when you want to save your money, like, you just make money, right? Like, let's say you want to get a house in this world where, again, there's a lot of energy and resources that go into a house. So no matter what way you cut it, they're expensive. Even if they're overpriced right now in a fiat economy, it takes a lot to make a house, right? And so if you have this environment, this economy where everybody's got shares of businesses, and as people are spending, they're also gaining income back because of the monetary velocity that's flowing through the economy, then that, like, you could get to a point, per se, where, hey, if I just wait 7 days, like I'll have X amount of Satoshis or Bitcoin coming to me from all of my portfolio. You also have an extended portfolio, which you could share and represent to people as like your sort of credit worthiness, right? So like, oh, I want to get a house. I can't get a 3% loan, but maybe I can get a 15% loan. I don't want a 15% loan over 30 years because I'll be screwed. Bitcoin will be climbing in value over 30 years. I'll be done for. So let me come up with like half the money for this house, right? And I'll borrow the rest. But borrowing the rest is still probably going to be hard to come by. Now, here's the funny thing is, I want to buy this house. You need an architect, you need a contractor, right? And an engineer, essentially, to build it. That architect may have started their business on loan, on equitable, at the stock exchange. I sold off 25% of my business as an architect to a bunch of people to pay for me to go to school, or to pay for my office, or to pay for this, or to pay for that. Okay. And then I'm going to start earning income from the sale of houses, essentially. Let's just call it simple. And then you have an engineer and a contractor who's like building these homes, and they have costs, and obviously, but they're also owned by 10,000 people in the community who are like super happy that you're producing homes that they want, because you're generating an income for them and you're increasing the productivity of your local economy, which is deflationary. And then their income that they're gaining off of your productivity, because of profits that are being distributed through the equity that they own, is inflationary. So like, instead of going to a bank to borrow the other 50% to buy this house, you're just going to lend me the house, right? So like, I gave you the money that basically paid for the construction of the house. Now I owe you all the profits. And so over the next 5 years, not 30, the bulk of that money is going to be front loaded, because over time, my portfolio will sort of pay me a little bit less and a little bit less of Bitcoin as deflation takes hold, right? Like, you want deflation to be like 2-3%. You don't want it to be 30-40%. 30-40% is a volatile economy. 30-40% is nobody produces, everybody saves. Then all of a sudden people produce. You introduce speculation because there's this volatility. It's like, you don't want that. So like, let's just fractionalize everything. Everybody can earn like dividends from hopefully what is like a decentralized stock exchange that's built on top of the Lightning Network, so that like literally every day you can keep collecting your dividends and have cash flow. Like, why can't that work? Like, to me, I think theoretically it makes sense. I'm sure I'm not, I haven't spent my entire life diving into the forces involved in this. And it's highly theoretical because we live in a world that only shows us what it's like when it's completely saturated in debt. So it's hard to kind of make those measurements. But why can't that work? I don't understand that. It's like, and then what happens over time when as you go to spend and the whole economy and like everybody's got like a pretty diversified portfolio, the economy's producing, I go to work 20 hours a week. I actually enjoy my job because it's not stressful. And I just do it to help the business that I own, like 20% of my portfolio owns, you know what I'm saying? And like, embracing technology, innovation, productivity climbing, deflation keeps going. And so like, all right, deflation keeps going. Instead of it incentivizing you saving, it should kind of it also kind of incentivizes you spending. It's like, you can afford more. So like, what's the part of it that makes you want to spend rather than save? Well, I think the part of it is whether you have an income or not. If you have an income, you're going to spend it. If you don't, you're going to save it. So like, let's just give everybody incomes by giving them the freedom to invest in literally like billions of a business, all local first, and then spread out. Hey, you have the freedom. This is a free market, capitalism. Invest in whatever you want to invest in. You want to put all your Bitcoin in one basket and go high risk, and maybe you could gain from like a business that has some game-changing technology going on and can like make a ton of profit. Go for it. You want to be safe because you're a young person still figuring out the world. Hey, go to your local stock exchange. There's 7,000 businesses in here. Why don't you just buy an index of every single one of them? And so like, as your city is like producing, you'll just make money. I don't know, like, tell me I'm wrong. You know what I mean?
Hey, it makes sense. It makes sense to me. I don't think anyone could be wrong speculating how hyperbitcoinization is going to look, because it's something we've never seen before. Like the human species, we've never, ever, 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 ever used a money that is absolutely finite and absolutely scarce. And then you layer in the other factor, we've just been wandering around in the woods and in the dirt for the past hundreds of thousands of years. And it's only really been in the past 20 to 30 years that technology has been surrounded by us, and we've been able to communicate with people globally via the internet. That's only really popped up in the past 20 years. I think the fact that now you can transact with anyone around the world at an instant, you can send them Satoshis on the Lightning Network instantly. I don't think you can be wrong speculating how hyperbitcoinization will look like.
I think the Lightning Network is as revolutionary as the Bitcoin network. I know it's kind of extreme to say that, but it is the reason why we don't need to separate the medium of exchange from the store of value. We don't need a derivative. We don't need something that's backed by what everybody else really wants. We need to learn how to use this ability to move this money at any point in time, instantly, and for essentially free, and make that happen a lot. Because at the end of the day, if we do embrace this type of economy where everybody's got a share of like whatever business they want and vice versa, like you could get to a point where it's just like money is like in motion. Like money is just constantly in motion. And like that's actually like really awesome, and like as people save, people get deflation. And like I don't know, man. Like I think that the Lightning Network and the ability to move Bitcoin rapidly is the inflationary force that means we don't need a derivative for the medium of exchange. It means officially, without question, we do not need to embrace this quote unquote artificial form of inflation.
I love that.
That's my opinion.
That's a big call. The Lightning Network is as big of an invention as Bitcoin. I like that. I really do like that. I think a lot of people are sleeping on the Lightning Network as well. Blej, I think I've kept you for well over an hour now, so I want to maybe fire a couple of rapid fire questions at you before we wrap this one up.
I like it.
Let's do it. We talked a lot about decentralization and the importance of people moving away from globalization, and on a Bitcoin standard, they'll be more focused on investing in their kind of local economy. Which countries do you think are going to do the worst in this transition to a more decentralized world, and which countries do you think would do the best, or even just areas around the world? It doesn't have to be a specific country.
I think it kind of flips the script, right? I think that third world nations that are like forced into this like position where every individual needs to sort of fight for themselves and, sort of take care of themselves. Not that they don't have economies and whatnot, but they're very much more capable of living off the earth. Whereas people from the first world are way more capable of living off the economy. Right. So like, I think that I mean, obviously El Salvador is ahead of the game because they're already like running an economy priced in Bitcoin. And so like, as this whole thing occurs, they're just going to see everybody's got way more money to spend. And they have an economy that's already circulating Bitcoin. So they have that income that's going to make them want to spend rather than save till no end. So yeah, I mean, I would say like, a region of the world that I think is going to be dominant over the rest of the world is going to be South America in the next 15 to 20 years. I think they're more primed. I think they're fed up with like IMF debt. I think they're all defaulting. I think they're ready to make the transition following El Salvador's lead. I think Africa is kind of like there as well. I think the further away from the sort of silver spoon of the money printer that you are, the more primed for success and this transition to hyper Bitcoinization. So yeah, like if I was a betting man, I would put my money on South America being sort of the global superpower as a whole in the next 20 years.
I love that. That's strange. We actually haven't talked in probably months. I haven't been on Spaces much, and so we haven't really had a conversation on Spaces. But that's exactly how I see the world. I've pushed my chips into the middle of the table, and I've left Australia and do not plan on going back. And I plan on staying in the continent that I am in the moment. So that's America. North America at the moment, the greatest country in the world. And whenever they boot me out and try to deport me, I'm going to go hide out in some of these Latin American citadels, because I think South America, I 100% agree with you. I think they're going to benefit the most from this kind of sovereign individual playbook unfolding. And I think for anyone listening, I did a whole podcast on that. I think I was talking about why I left Australia for Mexico just a month or two ago. So anyone listening and they like this conversation, head on over and you can check that one out. Latin America, I'm bullish. I'm very bullish on Latin America.
I love it.
Last rapid fire question for you, my friend. 2030. You look around the world in 2030, what do you see? Is there still fiat? Is there still a massive nanny state? Do you think we still got fiat in 2030, or are we hyper Bitcoinized?
Oh, and we're way ahead of that. I mean, I think by 2025, I've been telling you now, like I 2025, I don't see why. Like if there's fiat floating around, it's like just gaslighting and like, you're an idiot for actually like even accepting it, in my opinion, because I think federal governments are just not going to have the ability to fund enforcement as their currency dies. And so, yeah, that's the compound effect that I don't care. I mean, I haven't been shying away from it. Like as you witness what happened in Canada, and you see with this Russian war, and now there's a war on energy, and there's currency wars going on. Like, please, if the year 2025 the dollar is still around, like I'll be surprised. That's quite literally what I think. And I mean, I hope that as far as 2030 goes, I think 2030 is going to be a blissful, beautiful period in time, where I think, 5 years is really, to me, would be plenty of time in a hyper Bitcoinized unit of account that you get to a point where, we've kind of figured it out, and the game theory pushes us naturally into this realm, into this cooperative realm that we've really never really fully embraced as a civilization, like ever. And I think it'll be beautiful. I think you'll see a drastic reduction in wealth division. I think you'll see a massive increase of like home ownership and people owning their own properties instead of renting. I think you'll see a drastic decrease in at least in the United States, like services and service industry, because I think the majority of them exist specifically because all the manufacturing occurs outside of the world, which is a product of Triffin's dilemma. I mean, I think we'll be embracing robotics at a rate that'll be insane. But yeah, I mean, I hope that, the developers out there in the Lightning world and in the Bitcoin world look at a decentralized, I guess, layer on top of Lightning that allows for any business anywhere to just automatically, chop their business up into however many shares, put however many of them up for sale. And, if that business is transacting on a using digital money, using a software, as their point of sales that calculates for every transaction, then like you don't need accountants. And, right off the bat, you could be funded, and people who are funding you could feel completely and utterly safe knowing that it's a completely trustless network. And I think that those three networks together, Bitcoin, Lightning, and whatever you want to call this last one, that fractionalizes businesses, that is the dream. That is where, we find heaven on earth.
I love that, brother. I love that. I could not agree more. That's such a good note to end the podcast on. 2025. It's rare that I get to meet somebody who's just as bullish as I am, but I really do agree. I think things have really escalated since we hit that inflection point of 2020. And I think just the rate of things that are changing. Oh, God, we could talk for hours and hours and hours for a whole nother podcast about all of this. The Blej, thank you so much for finally coming on, my friend. I've absolutely loved this conversation, and I don't want to keep you any longer. Where can the listeners find you? Where can the listeners reach out, point them to anywhere that you want to point them towards?
Yeah. So as you said, my Twitter handle is the Blej. So TheBlej. I'm not really hiding my identity. My name's Adam. I work on a bunch of different projects. I'm a photographer and whatnot. If you're really interested in following what I've really focused on as far as personally, I started a Mets fan page. I'm a New Yorker. I'm a huge Mets fan, and it's called Faces of Mets Fans. I run it on Instagram, and basically my mission on this project, which I started in 2018, is to connect Mets fans through their photos and stories. And it's been a huge success, and it's actually really, really taking off as of recent. So I'm kind of putting a lot of eggs in this particular basket, as well as my Bitcoin basket, and seeing what I can make happen before we hit this huge monetary reset.
I love it. I love it. I love it. I'm bullish on Bitcoiners, bro. So I'm sure you'll kick ass in that little venture you're engaging in. The Blej, thank you so much for coming on, my friend. I'm going to cut that one there. I hope the listeners, I hope you're having a good day, and I will see all you guys next time.
Thank you, man. Have a good one.
No, thank you, brother. That was awesome. That was great. That was really, really good.
Yeah. Awesome.